Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Hi, my name is Steve Brotman. I'm the managing partner for Alpha Partners, a fund that focuses on pro rata rights for early and mid-sized VCs that might not be able to do their follow-on growth stage. So when they invest in their early stage investing, a lot of time they can't do their later stage. Today, I have Chip Hazard. He's a general partner at Flybridge Capital Partners, where he's been investing in early stage technology companies since 2002. He's also the co-founder and investment partner at XFactor Ventures, focusing on backing female founders. And with over 2 decades of experience in venture capital, Chip has served on numerous boards, including MongoDB, Nasumi, and Procea. He continues to serve at MongoDB. His investment interests span enterprise infrastructure, financial technology, digital health, and with lately a bigger focus on AI, which I'll share today. Chip holds a BA in economics and political science from Stanford and a Harvard MBA, where he teaches. As a seasoned investor and board member, Chip brings valuable insight and expertise to the Driving Alpha podcast, where he can share his experiences in driving outside investment returns in the venture capital world. And maybe he'll share some of his secrets that he's learned over the last 3 decades. So welcome, Chip, to Driving Alpha.
Well, Steve, it's great to be here. Thanks so much for having me. I love what you're doing with this podcast, and obviously love what you're doing at Alpha Partners. As a seed stage, early stage investor, the innovation you brought in terms of bringing the ability to help figure out what we do with our pro rata rights and downstream rounds is super valuable. So thanks again.
Great. Thanks, Chip. I appreciate the kind words. Tell me if it's an interesting story, it'd be great to hear more about how you got into the whole venture capital thing, the whole venture capital situation. Was it just you recruited and got the job and you're like, okay, yay? Or was there a little bit more of a story to that?
Pure dumb luck, really. But no, my quick career background, I went to Stanford undergrad, as you mentioned. I worked in San Francisco for a couple of years. I worked in Europe for a little bit, came back to Boston to go to HBS. And coming out of HBS, I had the opportunity to meet the partnership at Greylock. And Greylock, obviously one of the oldest venture firms in the industry. There were 6 partners and no one else, and they hadn't hired anyone in 10 years. And I think they decided it was time to make a hire. And so I was fortunate to join Greylock in 1994 and have a chance to really learn from the best in the business. And so as I mentioned, there were 6 partners. I had a chance to work with each of them over the course of my time there. And it was a lucky way to get into the business. Not often you can do so right out of business school. I think I was one of 800 in my business school class that became a venture capitalist, and obviously went on from there.
Very cool. There's a lot of luck involved. It sounds like eventually you decided to leave and start Flybridge. Well, how was that genesis?
So as I mentioned, my time at Greylock was great. I was fortunate. My first company went public. My second company, I think, with a 10x return. I became a partner in 1997. And over time, obviously, the firm was moving towards the West Coast. I made 2 decisions in 2002. One was a personal one, to stay in the Boston area and continue investing on the East Coast. And the second was hang out with entrepreneurs long enough, you want to start and build something. And so I took advantage of that to start and build a firm. And so we got going in 2002.
And where'd the name Flybridge come from?
We didn't start that way. We were put in business actually by a company. Our first fund was a solo LP fund. And then in 2008, we spun out and adopted the name Flybridge. The naming exercise is a fun one for any entrepreneur. You get to sit around a room with your colleagues and partners and put up a bunch of names on the whiteboard and decide what you like and what you can actually get the rights to. And Flybridge we like because it's the highest point on a boat. It's where you go to sort of see over the horizon, see where the fish are, if you will. We felt like that was a good analogy for the role we try to play with our founders. And so that was the genesis of the name.
Very cool. That's a great pivot point to talk about a little bit about your strategy. That's what our podcast is about to a large degree in generating that alpha. Could you share a few different elements that in your current thesis and perhaps how it developed from over the last couple of years? There's been a remarkable change over technology over the last 3 decades of your career. My guess is you probably don't remember. My guess is there are not that many folks that continue on after the 3rd decade, right?
Yeah, that's right. My first investment closed the same day, literally, that Netscape was released. Been part of the various technology waves over time. Our current thesis we describe as investing behind ambitious founders at the earliest of stages and those that are building our AI-powered future. And so we're 100% focused on AI. We're 100% focused on being sort of first institutional capital rounds, so pre-seed and seed rounds, and really doing so sort of up and down the East Coast. We have our main office in New York, and I'm here in Boston, and so we're headquartered on the East Coast and investing in companies that are building an AI, most typically at everything above the infrastructure and foundational model layer, if you will. So developer infrastructure and tooling to help developers build new AI-powered applications, and then the applications themselves.
Very cool. Any that you'd like to mention or of recent note?
Yeah, so the genesis of the strategy emerged over time. Obviously, we've been investing in AI for a dozen years. We called it different things. We called it, data science and machine learning, modern data stack. And so companies like MongoDB would have fallen into that category. We have a security company called BitSight that's a very AI machine learning powered company. Invested in some machine learning and data science tooling companies that we've since sold. But in November 2022, obviously, when ChatGPT comes out, for me, it was like the Netscape moment. It was that seminal moment when you say, holy smokes, this is going to be a massive technology shift that's going to fundamentally change how we operate, both in the business and consumer realms. And we felt as a firm, we wanted to take our collective expertise and really lean into that moment and lean into the growth opportunities that would create. And so we, at the application layer, are investing in companies in different sort of horizontal realms. We have a company called Melody Arc and customer operations. We have a company called Prime Security that's focused on an agentic AI app for security engineering. We're focused in vertical markets. We have a company called Noetica that's a legal AI company focused on credit documents. And so those are some examples at the application layer. And then in the more in the developer infrastructure space, where it's all about building, operating, managing, securing AI applications. We're investors in a company called Church AI, which is an AI firewall. We're investors in a company called RC that's building domain-specific small language models. We're investors in a company called Mako that allows AI models to run in a hardware-independent way, so they're not entirely locked into NVIDIA. And so those are different examples. It's all about building an ecosystem at the bottom and building the applications at the top of the stack.
Got it. Applications and infrastructure. But in terms of chips and stuff like that's not really where you play, right?
That's right. As a seed stage fund, when you need billions of dollars to build the next generation chipset, or you need billions of dollars to train the next foundational model, that's generally not where we're participating. And so we view those layers of the technology stack, if you will, as incredibly important. And there's a huge amount of innovation going on in that space, but we don't see that as necessarily a good place for us to be investing. We also, if you take an analogy from history, when you think about the early build out of the internet, the revenue and value tends to accrue lower in the stack, earlier in the development of that technology boom. And so in the early days of the internet, that was the networking layer, the companies like Cisco, that was the server infrastructure, the companies such as like Sun Microsystems. But if you think about where the enduring companies were built in the first generation of the internet, it was all at the application layer, the Googles, the Amazons, and the like. And so we believe a similar trend is happening here. A lot of early revenue is accruing in the foundational layer and the foundational models and then the infrastructure from NVIDIA and the other chipset vendors. And yet over time, we think that the companies that will look back on 10 years from now as having transformed this space, they're going to come much more at the application layer.
Very cool. How do you see over the next, is this going to be the biggest wave of our careers, or?
That's my hope. All these waves obviously build on top of each other, and you can't have the AI wave without having 5-6 billion connected devices around the world. You can't have the AI wave without the massive amounts of data that have been created in the first generations of the internet. You can't have the AI wave without the fundamental developments in terms of the core software stack and the deep learning models. And so all these pieces came together to create this moment. And I do think it's the biggest opportunity we're going to ever be investing in, and certainly for the next 10, 15 years. And so that's why we're all in and why we're so excited about it.
So as you're parsing hundreds of deals and perhaps even thousands of deals a year, was there any heuristics that you used to just, ambitious founder was one you mentioned, Sounds like, AI, obviously. Is there something about is the sector or the entrepreneur or both that you could share that you find particularly of note?
Yeah, you know this because you've been investing for a long time and also very successfully. It's always easy to describe and hard to do in terms of the nature of our job on the initial investment decisions. But we're on the founder front, we're looking for this unique combination of deep technical insights. I think AI is bringing back the emphasis on founders who are sort of deeply technical and they understand how they're going to leverage these new tools and technologies to the advantage of building applications and building products that are going to be truly transformative. So there's a more of a premium on technical insights and depth of technical knowledge in today's world than there may have been in the classic SaaS company from 5 or 10 years ago. You want to marry that obviously with a deep understanding of the domain you're going after. And so that combination of technical insights and domain perspectives, one of my partners calls that earned secrets. What have they learned that gives them that unique insight into a problem space that's going to give them an advantage? And then there's obviously always a lot of sort of non-resume characteristics of founders that are super important that you're trying to tease out as you get to know them. Are they truly passionate about the space they're pursuing? That'll give them the ability to work hard and put in the effort that's required to turn nothing into something, if you will. You're looking for evidence of grit and perseverance. And, we talk a lot about two other characteristics of our best founders. One is, sort of the Pied Piper, if you will. They just have this unique ability to get people excited about what they're building. And in so doing, it makes it easier for them to acquire their first customers, to hire people, to raise money. And that sort of magic effect of getting people to want to join your parade, we think is super important. And then those people also tend to have this sort of optimistic, unbridled energy, which tends to create the luck and the serendipity you hear founders talk about. I'm a firm believer that luck isn't created. It's actually a mindset, or luck isn't a lightning bolt from the sky. Let me say it's a mindset. And that unique founders, I think, have this ability to get people to want to join their parade, to get people to want to help them. And that help in turn tends to lead to those moments that you may look back on and say, oh, that felt lucky. So that's on the founder side. Market opportunities are sort of somewhat obvious. We're looking for companies that have an ability to drive significant growth and scale, participating in extremely large markets that they're trying to either disrupt or markets that may not exist that we think can become extremely large over time. So that's obviously an important part of the analysis. And then particularly in the AI space, we spend a lot of time thinking about two things. One is, what are going to be the sources of long-term competitive differentiation? Is there a unique insight around how data perhaps is going to recursively build upon itself to create a data moat and a better product that will drive more users, that will drive more data? So thinking a lot about sort of the data network effects, the AI learning effects is super important. And then we also are spending a lot of time thinking about the human AI interface. And so the big difference at the application layer with AI applications is that they're agentic, they're actually doing work, as opposed to a classic SaaS application that might be managing a workflow and allowing collaboration and coordination. The AI applications are actually doing jobs and they're getting work done. And so that requires a fundamental rethinking of how that AI interacts with the human, and in a way that builds trust and drives usage and adoption across an enterprise, as there's probably going to be a more sort of an ever-expanding portion of the jobs to be done that the AI system might be doing.
Wow. Okay. So for the founder, deep technical insight, deep domain expertise, and then just raw passion that drives a lot of these other things like grit and perseverance. And yeah, it's sort of, when you said Piper, it's really like a sort of intuitive sales capability. Would that be accurate? Or
yeah, I think that's right. Different people, it obviously manifests in different ways. Some people will be, in your classic sense, salesy, but it's really an ability to articulate a vision for the future that gets you nodding along and then increases that nodding into extreme excitement. And again, different people tell stories in different ways. They're compelling in different ways, but ultimately that's the critical success factor for people, because again, that's what allows you to recruit. That's what allows you to get those early customers. They tend to be better at raising capital. Our best founders are most typically also really good at raising capital. And so thinking about that is super important.
Right. And in terms of market opportunity, growth scale, large markets, the typical VC kind of rules of thumb. But in terms of the AI stuff, the differentiation, that's interesting in terms of the data and the data networks as one element. We're also debating that internally. Is data the only source of differentiation? Is there anything else out there that creates an edge for a moat, if you will, for AI, some of these AI companies?
Yeah, and yes, I think that's why I was talking a little bit about this sort of human AI interface. And it's a little bit of a nebulous concept, but it's how you bring the AI system into, this is most classically in a B2B setting, but into a B2B setting where there's sort of acceptance, there's an understanding on behalf of the end users as to the capabilities of the system. This is particularly important in today's world where the underlying capabilities are evolving so quickly. So you want to make sure you're building trust, you're not over-promising relative to what you can do, but you want to sell the vision, but you want to be able to actually deliver on the promise today. And so being realistic about what are the capabilities, being realistic about how you think about guardrails and evaluation frameworks and other things that will help those end users understand that the application is doing its job and doing its job at a high quality level, and that they can pressure test assumptions and things like that. And so that there's a lot of nuance that goes into building those applications in a way that builds trust and engagement. And then as the technologies advance and the touch points increase, you can do more and more of the job, if you will. And so we think the insights around that are going to be a source of differentiation. The winners will not be people who stick a Copilot into an existing SaaS application. The winners are going to be people who sort of fundamentally rethink the jobs to be done.
Interesting. In terms of next phase, is there, just like the other waves before it that we talked about briefly, is there another wave after this human AI interface, agenting interface that you're starting to see and think about? Or you've been investing in AI for 12 years, so I figure you might have some vision.
It's obviously the capabilities are changing so quickly. And so to a certain extent, we might have been too early. I first wrote about applied AI applications, I think in 2019, and that was probably a little ahead of its time. And we're still very much in the early innings of the capabilities of these systems, very much in the early innings of the skills that they can bring to the table. And you're going to start to see applications that are, as I alluded to, sort of much more agentic. They're going to take a job and break it down into different pieces, and different tools will do different parts of that job and then bring it all back into a consolidated piece of work that's ultimately very effective at driving the business outcome that's trying to be driven. And I think how those things are orchestrated, how those things are strung together is still being developed as we speak, if you will. And so both the tools to enable that is incredibly important, and we're excited about that from a developer experience perspective. And then the early adopters of those tools and techniques that can build these applications are the ones that are really just emerging. And so I think this is a trend that we see an opportunity to continue for a number of years now. My guess is, if you think about the analogies to the web was obviously wildly successful in hundreds of millions of users, but suddenly there was the mobile explosion, and now there's 5-6 billion users of the internet, if you will. And so there's going to be similar add-ons, if you will, where AI gets permeated into everything. And that may be in the form of robotics and systems in the world that are sort of AI in the real world. That may be in the form of different kinds of applications that are more ambient and always on in the background. And so those are the kind of things we're starting to think about while we're investing in the here and now.
We had George Matthews from Insight on Alpha Market a couple weeks back, and he talked about when Andreessen Horowitz talked about software, they talked about software eating the world. George talked about how AI is eating software.
Right.
Do you think that's the case? Is software dead or going to be dead or morph? Or what do you think about that?
I wrote a blog post, I think it was in January of 23, where I said there's going to be no such thing as an AI company, because every company will be an AI company. And so that's not really AI. It's not really AI eating software. It's just that you're going to see every company adopt AI at the sort of the core operating level, if you will. And so the idea of the 10X entrepreneur, if you will, who's empowered by all these powerful tools that allow them to market better and sell better and serve their customers better and develop software better and more quickly and more efficiently. So those are going to be one flavor of AI companies. So businesses that leverage all these tools to drive an extreme degree of efficiency in their operations. And we're already starting to see that across many of our portfolio companies in terms of their creative use of AI. And so even if they're not quote unquote an AI company, they're definitely taking great advantage of the capabilities. And then on the pure AI companies, obviously they're the ones that are providing those applications, providing those toolkits to help people drive that level of success. And so I do believe that AI will be everywhere. Obviously, it's all software in some regards. It's code. AI happens to be particularly good at generating code. So you're going to see an increasing amount of code that's not human generated, but AI generated. And so that will change the nature of the software development process. It'll change the cost and timeframes to develop new applications, which is something that's super exciting, because you can end up with very customized pieces of software built by AI that really match the needs of what your trying to accomplish as a consumer of that software, if you will. So I'm not sure that's AI eating software, but it's AI is certainly generating software that will go out and do all sorts of cool things.
So here's a question. You've been in the industry for some time. What is it about the industry that you wish your younger self knew that you know today?
Oh, there's a lot. So I think when I started out my career arc, I started out, I would say, relatively analytical. In the early stage venture business, it's super easy to analyze your way out of any decision. You and I could sit down with a new company and we could come up with 100 reasons to say no. And so that's not actually that hard. That's not the skill. The skill is knowing when to say yes. And that when to say yes is having a point of view on the world and how the world's going to develop and how this company may fit into that world, and be able to transform a crazy risk-ridden idea into something that can really become quite large and exciting. And so the sort of skeptical optimism, I probably could have gotten to that point of being good at being a skeptical optimist more quickly. So that's certainly one area I would encourage young venture capitalists to really hone the skills of every time they find themselves saying yes, to sort of red team themselves and ask, why should I, or every time they find themselves trying to say no, to red team themselves and say, why should I be saying yes? If I'm wrong, why am I wrong? Because the acts of omission in our business are the really painful ones, the amazing companies that you should have said yes to, that you said no to. And so really thinking about that and thinking about your own biases and thought patterns and where they may come into play on making those decisions. So that's one big category. I think the second is, the industry has obviously changed dramatically in the time that I've been an investor and the time you've been an investor. The year I joined, I think the U.S. venture capital industry raised $4.7 billion that year, which is today a financing round at OpenAI. So the industry as a whole was quite small, and the U.S. industry was the global industry because venture capital was largely non-existent in much of the rest of the world. And today it's hundreds of billions of dollars, and it's extremely global. And as a result of that growth, the industry has gotten very specialized. And so picking a lane, I think, is the other big piece of advice. And so how do you define yourself as a venture capitalist? What's your unique angle and insight into an opportunity? And then focusing very carefully on that. And that lane can be defined by stage. That lane can be defined by sector. That lane can be defined by geography. It can be defined by a lot of different things or some combination of those things. But we think that specialization is super important. And that's what gives you the insights into knowing when that right line on that skeptical optimist scale, because you're so deep in your sectors and you have good points of view on your sectors, but it also gives you the access to the opportunities that sort of fit in your lane. And, as a venture capitalist, you're only as good as what you see. And so you need to make sure that within the space you're excited about, that you're seeing as many of the potential investment opportunities as possible.
Flybridge, do your partners have different lanes that they fly in, so to speak?
Yeah, and in forming a firm, obviously, you're trying to build a partnership that has very different perspectives. And so those lanes are not just domains that they're excited about, but ways they think. And so my partner, Jesse, who's in New York, for example, is very much more the optimist skeptic than me being the skeptical optimist. And so we make for a good team in that regard because he's a great dreamer. He can see visions oftentimes better than some of the founders that we're meeting with will see. And so that's a unique skill set. That's a great counterbalance. So you're trying to build a partnership that's a very complementary partnership in terms of how you look at opportunities, how you assess founders, how you assess markets, how you assess products. And so I think that's important. And then, yes, within our respective areas of focus as a firm, I tend to be focused, quote unquote, lower in the stack. So more on the developer experience that builds on my experience at MongoDB as we went from 5 people to 5,000 and no revenue to $2 billion in revenue, and 100 people downloaded the product the month we invested, to hundreds of millions of people that have downloaded the product over time. And so I have a lot of depth of expertise in sort of developer-driven infrastructure from not just Mongo, but Firebase and a bunch of other companies. And so I tend to focus mostly in that lane. My partner, Jeff, is very much an application investor. Jesse's a little bit more on the prosumer, SMB, future work thinking. And so we try to marry different perspectives from a industry understanding in addition to different perspectives from how we assess individual companies' understanding.
Every firm is different in terms of how they get to a decision. I was just talking to Dror at Norwest about their style. And just as I get older and get some more wisdom, I was just really curious in terms of how that sometimes they're formal votes. VCs vote up and down. They have 6 partners and they have a formal vote. Others don't. How do you manage that process?
Yeah, we try to do 2 things in our investment decision making. So First is at the sort of halfway mark, if you will, of a given assessment of a given opportunity. We do vote. We vote on 7 criteria that we think are important. We do that across the entire team. And the point there, it's not an ordinal ranking. If you're a 39, you're good. And if you're a 38, you're bad. It's much rather to tease out differences of opinions. And so if I think a particular market opportunity is a 2 and someone else thinks it's a 5, why are we seeing this differently? And so we use that to tease out the difference of opinions across the team and make sure we're being incredibly sort of transparent with each other about our particular insights into the opportunity. But then at the end of the day, at the seed stage, conviction matters a lot and having contrarian opinions matters a lot. And so we are 100% supportive of high conviction, non-consensus decisions at the seed stage. And so there just needs to be a well-articulated point of view on what is that contrarian opinion? Why do I believe in this non-consensus opinion? And we're willing to take those risks and make those bets, if you will, at the seed stage because our overall capital being exposed is relatively small. And then as the companies progress and we're looking at follow-on decisions, those tend to be a little bit more consensus driven where if we're going to take an initial small seed investment and double it or triple it, we want to be much more consensus oriented and feel like everyone has perspectives as to how well this company's executed since we first invested, how the product is developed, the evidence and signs of product market fit, evidence and signs that the market does feel here and now. And so those decisions are a little bit different than our initial investment decisions.
So just curious, I've been asked by some journalists over the last year or so, do you incorporate any of the AI tools into that decisioning process?
Yeah, we've got a really talented person on our team who's sort of spearheading our internal AI usage. And so we're a number of different things. We have an AI sourcing pipeline that we use to identify founders that we should know that we don't know. We have AI portfolio management tools. So every investor update that we get from our portfolio companies gets run through an AI pipeline that pushes data into the right place and highlights key asks in terms of customer introductions or employees they're trying to hire into our hiring system or into our customer intro system. And so that's been super helpful from a portfolio management perspective. We have an AI-based investment memo generator. And so I can take a deck and a call recording and some other information and turn that into a first draft investment memo. And then we have an AI sort of red team that we can take a finished investment memo and ask the AI, what are we missing? What are we not thinking about? What are the issues that we could have done a better job of highlighting? And so those are different tools that we're using to, help our investment process, both from sourcing into investment decision-making and into portfolio management.
Is this all internally developed, or do you have any shout outs to anyone in particular in the software arena?
Yeah, it's 90+% internally developed. We use Harmonic for some of the sourcing work. It's not the only thing we use, but it's a good product on the sourcing side. And then the internal applications are built using a whole bunch of different things like Crew AI and Perplexity and some of the core LLM systems, along with a few other tools.
Cool. I've become a big fan of Perplexity lately.
It has a way of doing that.
It does. Or did you consider investing in that company? Or we saw it as a late stage company, so that's even scarier. I shifted my own career after 15 years as an early stage VC. I just felt like it was Groundhog's Day a lot of times, just watching the same mistakes happen over and over again at the entrepreneur layer. Any advice to entrepreneurs that you think are just critical in terms of avoiding some of those mistakes? Or
yeah, I always find that advice to entrepreneurs runs the risk of being very generic. Don't run out of money. That's your number one job as a CEO and founder.
Yeah, right.
But no, I've obviously, I serve on the boards of most of my companies I'm involved with, and over the years I've served on hundreds of boards, and ranging from, again, 3 people in an idea startups to 5,000 person public companies. And I think the number one skill for a venture capitalist as a board member is to listen really carefully. And if you listen carefully, it gives you a leg up in terms of understanding and seeing the patterns that may be the issues that they're not aware that they're about to run into. So I think a lot of the job that we're trying to do is provide headlights into the issues. And oftentimes those are sort of organizational. And so where if you're growing very, very quickly, where are you going to see gaps in your team, and how do you get ahead of those so you don't run into issues? As you scale a business, there's a critical period for companies when you think about moving from the success that's gotten you there to the success that's going to carry you forward. And so, as you know, a lot of companies can ride a single product and a single go-to-market motion to pretty significant success, but most often that success is going to be short of of the goal line. And so at some point in time, you need to go multi-product. Some point in time, you need to have multiple go-to-market motions. And thinking about the timing of that is critically important, because if you do it too early, you're unfocused. If you do it too late, you stall. And so we try to provide a lot of insights into that. And so those are a couple, sort of things that we're thinking about perspective.
Very cool. Before I forget, you were one of the co-founders for XFactor Ventures. Is that part of, how does that work with Flybridge? Is it just a...
Good question. So XFactor, just to give the quick background, is a pre-seed fund that's focused on backing companies founded by women. The market opportunity there is that the venture industry, 80 to 85% of the capital in the given quarter goes to companies with male-only founding teams. And so that struck us as a huge missed opportunity. And anytime you see a missed opportunity, that's an opportunity for incremental returns and driving alpha, as I guess we're appropriately talking about on today's call. And so that was sort of a market observation we had in late 2016. And it was pretty obvious that Chip, as a white male venture capitalist, wasn't necessarily going to be the best person to execute on that. And so I built a team initially of 8, today of 25 women who are all VC-backed founders, companies that have achieved some level of success, sort of Series A and beyond. And as a result of their success, they're in the flow of all the new opportunities. So new founders seek them out, most typically for sort of advice and guidance. And XFactor came forward and said, hey, we'll put a checkbook in your pocket. And so when you're meeting with interesting companies, interesting founders, and not only can you give advice and guidance, you can write a check and be an investor. And so an organized scout vehicle, if you will, everyone's doing it part-time. And in the 7 years since XFactor launched, we've invested in over 100 portfolio companies. We have a team of 25 women that are working together day in and day out to drive those investments and support those founders. And so that's the quick background on what it is. And the goal is first and foremost to generate returns. Second, obviously drive more capital behind companies founded by women and give them this great network of operators who can support and help them as they building and growing their businesses. And then third goal is to get more people who are founders excited about becoming venture capitalists. And so a half dozen of the XFactor founders have become full-time VCs. And so ultimately the industry changes its dynamics over time as you have a much more diverse and interesting GP base. And so that's sort of the backdrop of XFactor. And what it does for Flybridge, we're an anchor LP in the fund, but it really extends our networks. And so incremental insights, incremental opportunities to invest in, and all of that is goodness in the venture business. And so the more you see, the better you are, the broader the perspective you have, the better your decision making is going to be. And so it's been extremely additive to us as a firm in terms of extending those relationships and insights and access to opportunities.
That's awesome. This has been a really great discussion. Really appreciate you taking the time to come on. Chip's raising Fund 7, I believe, the latest version of Flybridge's seed fund. So if you're an LP, consider reaching out to Flybridge over the next few months. Chip, again, thank you so much for joining me. Thanks for being a friend for so long.
Absolutely. No, it's great to see you and love the chance to chat for a little bit.
Absolutely. And look forward to working with you on some of those growth stage opportunities.
You got it. Look forward to it. Thanks.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.